Forgive me if you've heard this one before, but the S&P 500 has set a new all-time record high today, one of many. It's part of a day of a number of interesting developments from around the world. We've also heard from inflation in the UK rose slightly, which in the current context will encourage people. Still a great deal of interest in the Bank of England's inflation report coming up on Wednesday. In Japan, there is, as expected, going to be a snap election. The uncertainty doesn't seem to be bothering people. In fact, the topics regained almost everything it lost on the shockingly bad GDP numbers from a day before. In the US, perhaps the most interesting development is if you look at the bond market, the inflation expectations, the break-even that you derive from the TIPS market has dipped to about 1.85%, apart from a few hours of mayhem last month when the bond market was in turmoil. That's as low as it has been since the summer of 2013. Very, very inconsistent with a market that is geared up for the Fed to start raising rates sooner rather than later. And finally, just to put the S&P record in context for you, here is a chart that I've derived from numbers provided to me by Howard Silverblatt of Standard & Poor's. This line shows you the proportion of earnings of the S&P 500 that is made up of the money that companies have spent buying back their own stock or paying out in dividends. It shows that it's steadily risen since the crisis and is now roughly 90% of profits that they are disgorging as cash rather than finding something more interesting to do. Some people think that may be unsustainable. It certainly, in the short run, helps the stock market rise, even if it isn't perhaps the most exciting use of those proceeds when it comes to the economy.